Right. And go ahead, accept. And we're going to get started in just a quick moment. And let's get started with Bulls versus Bears weekly Forex forecast. We have a very special edition. The U.S. versus Iran, tensions sending dollars surging. This is a Forex forecast that you won't be able to ignore or ignore at your own peril. Nice to see all you guys over here in YouTube world and also our VIPs. Dr. John's in the room. Nice to see you, sir. Bulls versus Bears. And weekly Forex forecast for 220, 220, 220, 2026, right? There we go. Make sure we handle the recording correctly, and we can start recording. Make sure that's coming through. And as usual, I want to type if you can hear me, type a number 1 in the chat box. Type a number 2 if you can see me, if I'm coming through. And again, we are broadcasting live on school. And join us live. We're going to make some changes here for the coffee hour. We're going to actually move our coffee hour to Thursdays at the same time. And we're actually just going to do call it Bulls versus Bears. We're just going to do a Bulls versus Bears podcast. Join us live for Bulls versus Bears, the weekly Forex forecast. And I'm going ahead and putting that link there. And then you can click the link to join. Click the link to join here. And then we'll go ahead and pop that link there in the chat box so people in the school can join. And we'll go ahead and post that announcement. That's just okay. Hope you guys are doing well. Markets are down. We're going to go and take a quick look see at the S&P and the other markets right now. With we're at the lunchtime hour in the stock market. We've got a little bit of a rebound. Let me go ahead and share my screen with you. I'm going to share our screen. And then we'll share some sound there. Okay. Dow Jones Industrial Average up a little bit over 1/10%. Not much. The S&P 500 up a tad too, about 0.5% there. NASDAQ up about almost a full percent, 202 points. NASDAQ, Russell is down actually, and the VIX is down slightly. Now, S&P jumps after Supreme Court knocks down Trump's emergency tariffs. That's going to be very interesting to see how what happens next. They'll probably most likely appeal. But the big news is really what's going on in the Gulf of Hormuz outside of Iran, where we're actually seeing the biggest amassment of U.S. forces since the Iraq War, and as the U.S. administration puts pressure on Iran to come to a nuclear deal, about discarding their intent to enrich uranium, and so President Trump has given the Iranian government 15 days to actually to comply or to come up with a deal. But frequently we've seen attacks happen over the weekend, and sometimes that he gives them 15 days, but it could be a lot less. So that's something. James Appleton, 3822. Good morning to you, sir. And you must be on the West Coast if you are saying good morning. And let me know where you're from. If you're watching on YouTube, let me know. Type in the chat box where you're from and what you trade. And I'll say how to do to you. Also, if you have any questions about certain currency pairs or something like that, you can post those in the chat box as well, and I'll get to you also. Let's take a look at gold, the shiny stuff, okay? And gold up 1.75% to 5,086. Silver also up 82.46, up 6.22%. And copper up 1.66%. Platinum up 4.74%. And as I've been writing about silver, the shiny metal, I've been posting that about silver, about the bottom that was put in silver, right? And I wrote several articles in our school community. If you have not joined school, make sure you do. It's a great place to learn about the fundamentals and technicals and things. I blend them together. Some people are all technical traders, some people are all fundamental traders, but I bring them together here in the school community, and that way, we don't stick our head in the sand when we're in regard to trading fundamentals. Okay, Adrian's coming in the room. We turn off the waiting room so we can allow people in and get rid of that way. Nice. Okay, make sure you mute your mic, Adrian. Okay, awesome, great. Awesome. Okay, so let's go ahead and get into, I'll go to my market heat map, arrangement of currency, price rate, percentage change, and we'll see what's hopping, what's popping, what's dropping, what's not in the markets. And you can actually have free access to this by going to mymarketheatmap.com, and you get access to one of 6 powerful heat maps and other tools as well. I mean, you get access for free to the calendar. And let me get a sip of my tea. I already had my coffee. I don't need any more coffee. I'll be jumping off the walls here. Got some probiotic, chamomile, and lavender, and it smells so good, and it's good for my gut too. And how they get the probiotics to survive 212 degrees of heat, I'll never know. The modern science, I don't want to know either. All right, so here's our 6 heat maps. So if you have the Aussie dollar in the top spot, up over 0.25%. I'd say tied between the pound dollar and the Aussie dollar, both kind of dueling it out. The euro is flat. The dollar CAD is flat. We stay away from gray. Green's in an uptrend, red's in a downtrend. Nothing's really downtrending. They're either gray or either green, which makes it pretty easy to trade. And you can get access to many more heat maps. We have one for equities as well. We can see what the equities are doing. We can see that it's green across the board, except for China. China is red, and they are red, really, literally red. Commodities, we can take a quick look at commodities heat map. Major commodities, XAG and natural gas. We can see silver, followed by gas and gold. All of them up tremendously on the tariff news and some other things. Also, my preferred broker here is Ox Securities, and you can go ahead and click the link if you want to be part of Ox and join us with our high leverage 500-to-1 leverage trading accounts. They're better than prop. No rules. There's no regulations, and you can withdraw anytime you want. And basically, if you deposit $500 with 500-to-1 leverage, you're trading with $400,000 in notional volume. So that's better than any prop out there. So the best deal again is Ox Securities, and you can wire by you can use bank wire. You don't have to use crypto either. So that's Ox Securities, my trading partner for life. Okay, let's go ahead and move on to our Forex majors. We're like hanging out there in the majors, not the minors. We see again. We said Aussie dollar. Let's go ahead and take a look at all Forex heat maps, all the pairs. That means the Forex minors, the majors, and we can see that tremendous lots of gray. It is Chinese New Year, Gong Hei Fat Choi, Year of the Fire Horse. And for those who celebrate Lunar New Year, Happy New Year to you. And we know that there are about 1 billion people who are just not doing anything but celebrating and this new year. And that traditionally makes February a very weak month to trade, right? That's a lot of people they talk about, oh, the weakness of February, and it's weak for a reason. When you have fewer people in the market, and this is a cycle that was discussed by Jeff Hirsch and his father, who wrote the Stock Market Almanac. And this was 2012, so you can add 20 years to the cycle. February is typically bad, right? And so with some bright spots in between, like it's a rally right now, but it's been down all week. So February is typically off, but March is good, April's good, May we sell off, July is good, and basically, this is a reflection of what lots of the holidays, right? The Chinese, basically Chinese New Year, and it's been going on for a really long time. So that's why that's why you're experiencing all the chop. And I just shared with Adrian a strategy that we used to use at the brokerage for actually trading very choppy markets, right? And I was, kind of, the head of research at the firm, and I would come up with different strategies, and then when people start making money, that they would spread across the floor, right? So even my boss, he says, so he would say, the strategy we had, it was called the bounce house. He would say, he said, well, my alarm has gone off. I gotta go trade Greg's strategy, and he would go in the room and start making some money, right? So we were all thinking about we're going to have Ferraris and things like that, but the problem is that the markets change based on seasonal patterns. In a seasonal pattern, and this is what I learned. I just had this tremendous idea, basically because of Adrian. Adrian was asking me about finding the trends. I go, yeah, you got to find the strongest trend. But if you're in this, you're not going to find the strongest trend. If you're in May, you're not going to find strongest trend. If you're in June, you're not going to find strongest trend. If you're in August, you're not going to find strongest trend. September, you're going to find strong trends. They'll all be like down for the risk assets, right? So what do you do here? People just don't stop trading here, which you can, though. In fact, Jeff Hirsch actually came up with a system where he basically just went to cash, went to bonds during that time, and only traded capital during January, March, April, October, November, and December, right? But sometimes you get opportunities where there is money to be made in those periods. Money sitting in bonds is, it's like watching paint peel and grass grow, right? It's not a whole bunch of stuff. So Jeff Hirsch and his dad actually wrote the Stock Market's Almanac. Okay, and I got a chance to, in fact, that's his dad right there, and they wrote the Stock Market's Almanac. So there's one for every year. I have one from 1998, right, in my garage, right. But I got to meet him at a conference. That's Jeff Hirsch, who the author, his son, who started the Stock Market's Almanac. And so he sent me a bunch of stuff on cycles and how different things would work seasonally, which I applied to Forex. Okay, so I met the guy personally and went through his lecture in the workshop, and so I came up with this strategy, and I'll show you where we actually use nested Bollinger Bands and look for extreme moves in the market, right? Where we take these Bollinger Bands, and when we have low volatility. I mean, this is a mess. This is the British pound, and nothing's really going on. If you even go to the higher time frame, nothing's really going on there, right? But we're actually going to go to if you go to maybe a 5-minute chart, right? You can see that if you just trade the reactions like I did here, I just got super long here, right, on the reaction. You could have got super short. When we get to the this is a 2 standard deviation line. This is a 4 standard deviation Bollinger Band, and this is an 8. So 2, 4, 6. Sorry, 2, 4, 6, 8. 2 standard deviation, 4 standard deviation, 6 standard deviation, and then 8 standard deviation, right? So when price moves if it's in a range and it tries to break out, it's a rubber band. We call the rubber band bounce house, rubber band strategy. And so really there's a lot you can actually do with this, where you can actually, when you get these extreme spikes, you can trade the extreme spike in the opposite direction, using this is a stochastics RSI, this is not regular RSI. And so right now, see, we're at a extreme move, and we like to see almost a capitulation down to like the maybe 34.68 would be the extreme for deviation from the mean. The mean is a 20-period moving average, and we were going to the extreme. So let's say we had a buy stop there, right? Buy limit, sorry. Buy limit because we want to buy below market, right? And so we look for a price to snap back, hit this rubber band, and then snap back to the middle, a mean reversion. If price mean reverts, then we could pick up $2,000, right? If it keeps going, that's the thing about it. It's these moving averages will keep us, all a Bollinger Band. John Bollinger invented the Bollinger Band, which is pretty cool. Yes, Sean, you remember? Yes, the old Forex cash machine from back in the day, back in 2016 to 17. Yes, and it worked. Made a ton of money with that. But again, guess what? We went from low volatility to high volatility, and this thing. What happens is when market starts trending, 80% of the time they move sideways, 20% of the time they trend, and when we have a trending market, these things are useless, right? So that's what happens with people when they trade the trend. Oh yeah, I can trade the trend, right? But and you try to use Bollinger Bands on trends, it ain't gonna work, right? Yeah, because what happens is it'll just walk the band. Let's go out to a higher time frame. Let's go out to maybe a 2-hour, right? And you whoa, really? Oh, we got to back up. Something happened. I hit something. Okay. Let me try that again. Reload. Okay. And then go to, say, a 4-hour, right? What happens is when you have a, see, like this is where we remove. Oh. Okay. Okay. Remove all drawing objects. How about that? Okay. So when you have a trending market like we had here, well, guess what? They're walking. We don't revert back to the mean. We just keep trending. So this strategy would be you would just lose money, because what happens is it gets to the top of the band, you short, goes down a little bit, and goes higher, right? So we're in a trending market, but when we get down into we're in this sideways consolidation, right? Or is this kind of sideways drifting down a little bit? Extreme moves will give us buy opportunities. They're not big though. Okay, you're gonna pick up like 5 pips or something, right? And that's why I go here. You can go big lots and not really risk getting blown out with a margin call or hitting your stop, because if you have your stop below the band, chances are price can't. There's not enough force in the market to drive it in a trend, and so actually it's a pretty safe market to trade. I know the trending market is more sexy, but like I said, the Forex cash machine, and then we threw one more thing. We threw in another indicator. What's it called? Little dots. I just forgot what they were. Sean, help me. Little dots. They're called. Wow, really? I just drew a blank, right? Right. It starts with a P. Maybe it starts with no. I don't remember. Okay. I thought I had saved as a template. Probably an old computer where it was, right? It has to do with stops. It has to do. I'll come up with it. Okay. So anyway, let's go to a clean chart. I'm going to remove all indicators. Right. Let's start with the DXY for bulls versus bears. The weekly forex forecast. Yeah, that's it. PSAR. Stop and reverse. Parabolic stop and reverse. That's it. That's it. Bingo. John, you're so smart, bro. Parabolic SAR. Right. These, right? So if you go back to our template. No, that's not a bounce. Where's bounce house? Okay. Yeah. And then we add parabolic SAR. Right. There we go. So you got your yep, parabolic stop and reverse. Got it. Mm-hmm. So you got your dots there. So we're hitting our dots. And when the dot goes from the bottom to the top, it's in a downtrend. If the dots stay in the bottom, well, these are your stops. All these are stop, right, within a couple of deviations. So we actually hit the stop, and then the dot went to the top there, right? But I think this thing is going to turn, and might turn sooner. Maybe we get one. See, we want a wick that comes way down like that and spikes us out. I did a trade on pound kiwi, and I was in the spike, but my order wasn't triggered. So it's kind of wild. So let's see if this one will force down and drop and maybe stop us into this trade, and then our stop loss would be behind the band. The band's like shifting, right? So that's like a 1-to-1, right? For scalping this market, like a 1-to-1. Okay, so let's set that up. We'll see if it triggers during our analysis, right? But let's go ahead and start with the okay, I know I'm here. I'm actually want to go back to my market heat map. Let's go to our trader tools, and let's go to our economic calendar. Kind of starting all over the place here, but I hope you found that kind of useful and helpful. That if you are in a market and getting chopped up right now, don't fret. It's the market. It's not you. Okay. So I just don't want you guys to February is the worst month. You start trading in February and then you just give up because you think it's too hard. And it's like, yeah, compared to like last month, the month before, it was so easy last month. It was a different market, right? And you have to have different tools for different a very different market, right? I was watching, I used to watch Gentle Ben. Remember Gentle Ben and his dad, the little kid that was there, and they had a friend that was a bear. They lived like the Florida Everglades, but they had an airboat driven by a fan. And it's like, why would you have a fan? Because the water is so shallow. If you had a regular outboard motor, it would get tangled up with all the weeds and stuff and so they skim across the water, right? So they have a different type of boat for a different type of water. And so we don't hit this very often, February and May and June, but the rest of the time, 80% the other time you can use other stuff, right? Okay, so here we go to the next week. February 23rd, we're going to have some things. We have Fed Waller. I'm going to filter it down to, I thought I did. Okay. Oh, save. I got to save it. I saved. Refresh. Because I don't want all these medium term items. They'll just clog up everything, but it's not cooperating. Turn off and click save, right? Turn off and click save. Okay. So economic calendar is very important for those of you who are new to trading. The economic calendar tells traders like what's going on in the market. The currencies don't move by themselves. They have catalysts or news items that are released, and people trade as a result of these news items. And these provide, I love trading Australian news. Australian economic news that comes out. Monday, we have something at 4 a.m. with IFO business climate, and that's going to impact the euro. 87.6 versus 88. They expect the business climate to be higher than expected. I don't really pay attention to this. I just know that Germany is part of the Eurozone. And so the euro at 4 a.m., between 4 a.m. and 6, the euro is going to be hot, right? So the economic calendar tells me what to trade, right? So I call it fund with flags. Not fun, but fund. I get funds. I get money when I trade the flags, right? So you got to know that this is the German flag. Germany is one of the largest economies in the Eurozone, and around between 3:30 and 5 o'clock, the euro is going to be highly active with this high impact news item. And if you're old enough to remember, or you should, and if you're not old enough to remember, you should watch Trading Places with Eddie Murphy and Dan Aykroyd, where they're trying to get the inside information, the crop report, and they trade, based on the release of the report. That crop report that he shows in the movies, all of these are reports, and all of these impact the currency, just like in the movie, right? They just focused on one report, the frozen concentrated orange juice from the Department of Agriculture, right? And to see if the crop was going to be a bumper crop or it was going to be a disastrous crop, and that would tell the traders to start buying. You could trade frozen concentrated orange juice, right, on the market, along with coal, with copper and palladium and gold and cocoa, the exotics, the soft, they call them the softs, frozen concentrated orange juice, cocoa, coffee, sugar. You can trade those on the CME, I think, or CBOT. So you have the consumer confidence that comes out on Tuesday. We got American flag. We can either trade the dollar yen, dollar CAD. I prefer to trade the euro when I see an American flag, because the euro is, again, called the anti-dollar, and so it moves very well when we have U.S. data. If it's good for the U.S., it's usually bad for the euro. If it's bad for the U.S., it's usually good for the euro, right? And so we have that coming out on Tuesday. So you almost stay in the euro from early morning to midday on Monday and Tuesday. Then in the Asia session around 7:30, we have lots of Australian data. We have RBA trend mean year on year, inflation rate, very important, and CPI. Inflation is a very big driver of currencies because central banks want to fight inflation. And so they raise and lower interest rates based on the inflation picture. If we have a high inflation rate, it means that the central bank will have to raise rates, and the hike in interest rates pushes up the price of the rate of the currency, right, and gives it a big boost. So they're expecting inflation to fall, but if they surprise to the upside, when we can see it rise. Aussie's been in an uptrend, so we would think any data that comes out bullish would push the Aussie higher, right? Then on Wednesday, we have the consumer confidence coming out on Wednesday, and that is also Germany. There's 3 Germany events. We're trading the euro there. We have consumer confidence, growth rate quarter on quarter, and GDP. And we just had U.S. GDP too, came out at 1.4% for the fourth quarter, down from 4.4% from the third quarter. Kind of unusual because you usually see higher GDP in the fourth quarter, but people may have taken an early holiday, right? Of course, the Trump administration is going to take heat for the weaker number, but a blockbuster. You got to figure that 4.4% is hot, very hot gross. GDP measures the economic activity of the country. Typically, we've been doing about 2%, right? So we did double in one quarter. So it's almost like we pulled it forward. We've been on average on trend about 2.3% GDP. We get 4 one quarter, 1 the other. We'll take 2 from the third quarter, add it to the fourth quarter, and it evens out, right? For the year, we're still trending higher than last year, right? But that's that's when we watch the news, they'll spin it a certain way. They'll say, all jobs numbers are up, but it's only in the medical field and only in construction. It was like, yes, but it's still double what you forecasted. You forecasted 65,000 jobs. We had 130,000 jobs. Who cares where they came from, right? As long as they're not new government jobs, which really don't add anything to the economy, you should be happy that jobs are actually increasing in the U.S. But you got TDS, Trump derangement syndrome, and you don't want to admit that the economy is doing much better. Anyway, me get off my soapbox. But it's very important that not to, when you watch the news, remember there's a liberal left-leaning slant to it. And so they don't care if you lose money trying to bet on it. Just like they said, Trump tariffs are going to send us into a recession. And when the stock market went down in April, if you sold your stocks based on what they said on the media, you would have lost money because the market's been up almost like 50% since then. So you trade with your brain and trade and not with the you got next Tuesday, State of the Union, right? State of the Union, and I don't know why that's not on here. That's very important, right? 9 p.m. New York time. Yeah, State of the Union, usually a big driver for the U.S. dollar, right? Thanks, Sean, for putting that in there. So, guys, again, Tuesday, 9 p.m. New York time, 9 p.m. State of the Union, and we're going to be finishing trading around that time. So we have core inflation rate again year on year, and core inflation rate year on year final. They're expecting inflation to fall. I'll look at this number because if the euro is downtrending against the dollar, we might have a bias for a short trade. And then Thursday we have initial jobless claims, and that's a weekly number that changes. That's going to be a big one. Again, we're going to be trading the euro on this one. Friday we have more European data. This time is France. You recognize that this is France, and France is part of the Eurozone. So in understanding your geography, knowing your flags, I know a lot of, when you they did a survey where they went to kids and asked them like, where is, what's the capital of, California or something. They'll say Los Angeles, right? Or they'll say, where is Ukraine? They'll say somewhere in, in Egypt or something like that. That it's really, knowing geography is very important. Knowing where countries are, knowing these things. If they could tie them to money, because I tie this to money, I want to know where France is. I want to know it's in the Eurozone. I want to trade the euro. There's a connection of this information that leads to a motivating factor, right? And so if you're trading and you don't know your countries and you don't know your flags and you don't know what these countries stand for, what their economies are all about, or how they're intertwined, you're really trading at a disadvantage. And that's why I recommend being part of the school community. We have a whole series of courses here, everything from baby Forex pips that takes you from what's a pip, long versus shorts, emotional trading, fundamentals, and very short. Each video is about a minute and a half, and you can get yourself up to speed in just 16 short 1 minute lessons. In about a half hour, you can do all these lessons for that. And then move on to Forex Foundations, our freshman level. And then we go into some more advanced things, introduction to Forex, risk management, understanding margin, trading currency crosses, right? And then you can step into the Samurai Sword, a strategy invented by one of my $1 million clients from Russia. And this is the opening range breakout strategy that really was invented by Tony Crable back in the 1990s, but she had great success. And I take my most successful students, I have them make courses, right? And then we also, so that's that for all, 7-day free trial, and then just $7 a month. So about the price of a cup of coffee. So look forward to seeing you. If you're watching on YouTube, you want to have a closer contact with me. I chat with my students in our group here, And so we have a great community that's growing, and it's to help you trade faster, trade smarter, and make profits in less time using the pip and run method. Okay. All right. Back to the heat map, right? So Thursday jobless claims. We have lots of Friday data, and it's a hodgepodge of countries. We have the Swiss data coming out, GDP growth rate, inflation rate out of Germany. Then Canada has a bunch of data coming out too. So 8:30 a.m. That's a typical U.S. news cycle. We have two U.S. news cycles, one at 8:30 and one at 10 a.m. So 8:30 you'll get a boost. So if you're sitting around your computer and you see your market just jump up at 8:30, hey, what happened? Why did market? Because it's 8:30 and there's news. That's the crop report, and you don't know what happened, right? And then so we're gonna have a U.S. news cycle at 8:30, which Canada Canadian news comes out. So I call it the North American news cycle, right? And then we have our U.S. and of course we have the Canadian flag, so we can trade dollar CAD, CAD Swiss, CAD yen, Aussie CAD, Kiwi CAD, any of the CAD pairs you can trade with this, right? And then we have core PPI, which is wholesale inflation, expected to stay unchanged at 3.3%. PPI 0.5, dropping to 0.3. Core PPI dropping from 0.7 to 0.3. So even though we have tariffs, wholesale inflation is dropping because that's what happens, right? Any more data coming out there? We have some Chinese data coming out. The rating dog manufacturing PMI. That's on a Sunday. We're not going to worry about that. Okay, so that's enough for the fundamentals. So now you got a roadmap. What's going to be in play? So if you're trading some weird, peso, Turkish lira, and it's not moving, it's because there's no news behind it. You want to trade stuff. You don't need to trade the news. Wait 30 minutes after the news to trade it. But that's where the eyes are on the currency, right? And let's go ahead and go back to the here. Okay. So we're going to go to a clean chart. Clean chart. I'll just go right click, remove all indicators, right? And we're going to start with a 50,000 foot view. We're going to start with the dollar index. And the dollar index, we can see, is moving sideways, right? It is biding time. And again, we have lots of warships around the Strait of Hormuz, around Iran. And so there's a lot of indecision in the market going on right now. And so 15 days, the administration has given the 15 days for the Iranian government to make a decision to either make a deal or no deal. And if they no deal, then there's going to be like rockets and stuff flying around, and the markets are going to be unnerved by this attack. So right now, everything is in this kind of indecision mode. Plus, there's Lunar New Year going on right now. 1 billion people are not trading right now, and that's why we're stuck in a range. And so dollar index is basically you're just trading between support. We have support 96.35 and resistance at 100.41. And so basically price is moving like in Pong, right? We're gonna move from up and down and up and down, support and resistance. So you can buy the floor, sell resistance, buy the floor, sell resistance. That's all we're probably gonna be doing until we get a breakout. A meaningful breakout is a close above about 100.41, meaning breakout below 95.53. If we do see a break below, we could see a move all the way down to 89. That'll be like a currency crisis, right? That would be a big boost for gold and silver, right? If we broke south, right? But this could last for months, right? But probably at least for the next 15 days before we get a breakout, right? So bulls versus bears, that's nothing here, right? We're at the bottom of the channel. Let me drop it down to a weekly chart, right? So I'm bullish, basically, right? Whereas our what we're looking at, because we're closer to support than we are to resistance, and so that would mean that we would see price bounce off from that area. If it doesn't close, we're bullish against the wick, the 95.53 exploration. They went on an indenture, they got rejected, and now they are sitting here waiting for the next move, probably next move up. So we're short term or medium term, we're bullish on the US dollar. Okay. Daily chart, we can also see we're getting a lift off there too, right? Let's go to the euro, the anti-dollar. Let's see what's going on there, and let's go back to our monthly 50,000-foot view. I took some shots at that baby, got long, and took it up to the wick and got out. Remove all 4 drawings there, and then let's get rid of all these little execution marks there too, right? Okay, so here we go. This is our beautiful 1 month chart, and we can see that we are not really going anywhere in the past 10 years. We've been stuck in a range for 10 years between 95.65 and 125.51. We have not gone anywhere, right? And so we are in any uptrend within the range, right? We're in a range, sideways move, but we are moving higher. But what's going on was getting a little bit of rejection here. We have a new higher, but we're making an inside day candle, a candle that's inside the inside month. I call it inside month candle because this candlestick is inside the body, a distance, the range of this other candle, which usually is bearish, right? Even though it's green, and I use Hakanashi for my analysis. So if you're saying, what kind of candles is Greg using? I'm using special candles, right? And they're scented too. They smell like lavender and cinnamon and vanilla, right? It's kind of relaxing. Anyway, not really. So here we go. This is our weekly chart. The euro, again, we're making some higher highs and higher lows. We had this capitulation where the bulls got very, very excited, and they were rejected. And we have these small body candles, and we might see a drop back down to the 114 area. We got a little bit of support there, and we have this resistance right here. I mean, we actually have a full-on like demand zone that's like looking for a retest down here. So this old school supply and demand zone area. I mean, we've got this zone here, these resistance zones, that 123 area to like almost where we got. It was a zone where let go. It's stuck to my hands. It's like sticky peanut butter, right? Right. So we had and that stretch all the way back to here, right? So every time we got in this area, rejection, and then we just a little bit got their hand burned. So our daily chart, we can see that it's the full on, maybe a start of a 1-2, and we're starting wave 3. 3 is never the shortest, but the longest one. And we can extend down to support 15.58 right there. We can see this daily chart, right? And we can also put, this was our big swing base there. We can also put some fibs on there too, from the low to this high, and we can start looking to take profits or scalp this into these zones, right? We can scalp into the next support zone. This next support zone 1590, right? We're 117, so it's about 200 pips south side. So we could go south side on the short, right? But be careful because there's up moves within the whole thing, right? Like right now, see, you get these up moves that could actually go 30, 40 pips counter trend before they drop. So be careful, right? So you want to sell when we close below 117.33, right? So I'm actually short-term bullish because we've maybe created a double bottom, but medium term, I believe that we'll go lower, right? So I'm just going to go. Okay. Let's go ahead and take a look at our go right across the pond to the pound dollar. and the pound dollar goes about to our monthly there, and we're still waiting for our our buy stop is going to be triggered soon, maybe. But this is a monthly chart, right? And we can see that we really have been stuck in a range, right? And I would think that it's a kind of a sad day in England where the first time that a royal monarch has been arrested since 400 years, since Charles I, right? And so the markets are, the British market is very sensitive to royal news. In fact, this drop was the death of the Queen, and this rise was the coronation of King Charles, right? And if you go back to 2003, the Queen Mother died. She was 103, and the pound dollar went down. So I would think that given the prince, the king's brother, going to getting arrested and maybe looking at life in prison, that we might see some type of a pullback or salute or mourning for this the sad event in British history. They are very historical, and they do things to their currency in order to. It's almost like when, like, let's say the president was on the ground, making a speech, and there'll be a flyover, right? Jets will fly over, and then they'll tilt their wing to wave at the president, right, as a salute. Well, they'll tilt their currency to. I remember when Larry Summers, who was the Treasury Secretary under the Clinton administration, when he resigned or retired, they dipped the stock market for him. I mean, the market just literally just dropped. They said they're saluting Larry Summers right now, and they literally take the market like 100 points super fast and turn it back. Yeah. He's officially Mr. Andrew Mountbatten Windsor, no longer Duke of Prince. Thank you so much for that correction. Right? He's been stripped of his title. Right? Andrew Mountbatten. Yeah, if a name that long, I would have gone by it. So he's like the weirdo that's called who goes formally by the name of Prince, right? Purple Rain, Purple Rain. He's formerly known as Prince. That was a story. You guys got to remember that. Okay, go back to the weeklies. Here is our pound dollar, and we can see a lot of topping action right there. Again, we got this was like a wall of resistance right there. That whole area. Price had a memory, was rejected in 2021, 2018, 2026. Probably not going to be the same, right? We're the same type of thing, same old. Anytime we get into this area, big drops happen. Get into this area, big drops happen. We can see that historically. Again, they say past performance is not an indication of future results. However, price has a memory. And because it has a memory, we can learn from it, right? We can look at, we had, 36 years ago, we had the fall of the Soviet Union and the Berlin Wall, and we're at the same kind of point where new world orders coming to pass. Currencies changing, currency regimes are changing, and so a lot of things. There are some big changes going on, and so all we have to do is like go back to that time and see on the charts. We can see what happened in 1989. What was going on with the currency then, and what happened during that time, that upheaval, right? And we can see, if we go back to 89, you look at 88, 89. What do we have? We had a severe drop in the strength in the U.S. dollar around this time in 1989, 36 years ago, right? So things follow these cyclical patterns, and sometimes they track right away. Sometimes they don't. They're a little bit off, but we'll see, right? Let's go back to, we went across the pond. Let's go ahead and go to dollar CAD. Let's keep going west. Head west, young man, right? Oh, pound dollar, I'm bearish. I'm there. Okay, let's go to this is dollar CAD. Dollar CAD's an interesting animal. It hasn't gone anywhere either in the past, 10 years, right? 10 years was which actually, if like I said, there are advantages to trading these ranges like this, that you're not going to get blown out. You kind of have a predefined risk. There is some certainty when you're trading within the range, right? And this looks kind of interesting, where we've topped out in this area, and we could see, if Iran gets attacked and that's a supply of oil that's taken offline, there may be a great demand for Canadian oil, which could trigger actually a rallying Canadian dollar versus the dollar CAD, right? You think about the fundamentals going on, and you want to check the price of oil, because Canada supplies supplies like a large percentage of U.S. oil, and so Iran comes offline, and Iran supplies Russia and China with covert, oil that goes, because there's sanctions against Iranian oil right now, but they have a dark fleet. That's what's been going on. Trump has been capturing the ships of that fleet. So now China has to go out in the open market and buy oil from legitimate sources, and that will drive the price of oil up, right? In fact, let's go over to WTI. It's at the cash market oil, right? And we can see oil picking up. We had support. We had support at the 55.23 area, and then we're actually, we're breaking out on oil, right? We got a breakout, and so if oil continues to will rise, then and then UK oil, we also have here with UK oil. That's the the North Sea oil. That's also moving up as well, right? And we have a really big Fibonacci pattern here, right? Big Fibonacci support right at the 61.8% support level, right? And so, we could see old highs if these lows hold, right? We've got demand, lots of demand in here, right? Which goes all the way back to back here, right? If we take that out, right? So, but we do have, we have resistance at $80, but 63 to 80s would be huge, right? Rising trend higher. We have a higher low, and price will probably seek some of these other levels, right? So I'm actually bullish on oil. I know this is your bonus. I didn't only include oil, but given what's going on geopolitically, with an armada of U.S. ships surrounding an oil producer like Iran, and you don't think Iran's not going to lash out at Saudi Arabia and other oil producers, because that's what they do. They attack other countries too that they can attack. That's going to drive up the price of oil as well. So we could see, if that war breaks out, it could spread to other oil producing countries and reduce the supply of oil online, and we could see a giant move up, maybe up to the 91 area. Okay. And since going back to CAD was where we were, right? We can see it's already taken off. They're not even waiting, right? They're not waiting for the 15-hour, because they're not waiting for the 15-day deadline. Traders are already taking positions now, and then when the actual rockets start hitting the ground, they're selling. They're getting out, right? They're getting in before the news. This is how you can use the news as a catalyst you can trade instead of watching it, numbing out, and dumbing down your brain, and you can actually say, oh wow, great, this is an opportunity, let's make some money on it, right? Okay, back to dollar CAD, right? So as this drops, we could see that the Canadian dollar would strengthen. We can see we had higher highs and higher lows. We have a structure change, a break of structure, a BOS. Lower highs, lower lows, lower high, lower low, right? So we can break 34 at 69. I would be shorting the dollar CAD, right? So dollar CAD, I am bearish dollar CAD, but which really means I am bearish dollar, bullish Canadian dollar, right? So, and again, if that does not make any sense to you, go to our baby Forex pips, and they'll explain the currency crosses and stuff like that, right? Okay, moving right along to our dollar. Let's go. We skipped dollar Swiss. Dollar Swiss is an interesting animal that because it has the Swiss franc in it, both countries are risk assets, risk off assets. People will run to U.S. bonds. People will run to the Swiss franc as safety because they're a neutral country and they've always been kind of like a banking, clandestine banking center, right? Secrecy, not so much now. But you can see that during geopolitical things, people just run to, even though they have a negative interest rate, they want the safety. We have a low down here at 70, 75. Will probably be tested. And so we might see the Swiss franc appreciate during this time, during a wartime. So I'm bearish dollar Swiss. So let's go to dollar yen. So in that dollar complex, you see it's different. See, now look at this. The dollar is strong versus the yen, weak versus the Swiss franc, right? We're making some higher highs and higher lows. Though I don't like what's going on. So you remove all drawings there, right? This is like, so Trump said, Adrian says, Trump said charge 30% Swiss. I don't know. We'll do it. I mean, it's not like we get a lot of stuff from Switzerland, chocolate and watches. I like their watches. You get that Rolex Presidential watch is an awesome watch. But I bought one. They charge tariffs on it. I don't care. There we go. I'm sure they make some. They do make medical equipment and stuff like that. But so there we go. We've got this this rally into a bottom. We have this rounded bottom, kind of a cup and handle kind of thing, right? And we have this huge gap here. So you gotta watch this because watch Swiss. I'm here all day. 2 drink minimum. Coffee, that is. What's he talking about? Well, what you talking about, Willis? We've got this rounded bottom. The bears have tried for a long time to try to break this 75 area. I mean, they've been trying since 1988 when I was in college, right? They've been trying all this time and they're unable to do it, right? And so, and they're back to these old highs of 1990. Like I said, stuff that happened 36 years ago is starting to repeat. They're starting to see a repeat of music, a repeat of TV shows. They're remaking Baywatch. So that's telling you something. We're caught in this Mobius loop, a stitch in time in the fabric of space, where time becomes a loop and there's no escape. Right? We're just looping around. Right? Groundhog Day forever, and so we get a break above this area. We could see a break of. Oh, Adrian supplied an article there. I'll take a look at that trade policy. we get this break above 164.07. If we break that, that could be huge because this is a gap. See how violent that drop was from 260 down the year? I mean, I was 85. I was in high school or graduating high school. So I was, and then so that gap has never been filled all these years. 40-year gap that hasn't been filled. That's we have not been able, and they had 30 years, 40 years to try to break 75. So they had 30 years to do that, and now they're back to where they started. If we get a break about 166, this thing flies to 258, right? This is the rule of symmetry. And you probably, if you read old trading books, you kind of you learn about this stuff, right? And that's why a lot of my students love being in Elite Traders University, because I know a lot of old stuff, right? And stuff that still works, right? So you take the distance between this distance and this distance should be equal, usually equal. And we see in time, right? But this was 85 and this was 2025, right? 2026. So I was like, wow, 40 years. So we can see this. So I would look very closely. A break of 62.13. We're at 53. It's like 100 pips. No, we're like 100 pips, right? It's like 1,000 pips away, right? Well, 1,000 pips is on a weekly chart. Daily chart, this thing is trying multiple times to get over the top. And we have higher highs and higher lows and a double bottom right there on a daily, unable to bust lower, right? So the bulls seem to be staging a rally. It could be the Swiss National Bank too. They're tired of having a strong currency. They probably want to Adrian's point. With this article, I'm gonna click it because this kind of ties in. If they want to offset the tariffs, all they gotta do is weaken their currency by 30%, and it nullifies the tariffs. The tariffs get absorbed into the currency devaluation, right? Which is so he sent me this article. It doesn't come up anyway. But I'll read it and summarize it and pop it in school for you guys. So if you remember the school community, you get to watch my digested version of that, of my interpretation of it, and how and actually give you a trade idea, right? Oh, this is dollar yen. I'm sorry, this is dollar yen. Dollar Swiss. Sorry. Oh wow, I got turned around there, right? No, dollar Swiss is in a serious downdraft, right? But there is an old low back here. I'm sorry, I got completely turned around there. That was Japanese yen I was looking at, right? Japanese yen. There's a gap there, right? And yeah, that we break that. I'm sorry, dollar yen. I'm sorry. Got these taking all these dollar pairs at the same time. But again, we're making these higher lows against this thing, and but the yen does get strong during geopolitical events. So if we have an attack in Iran, usually the yen gets stronger. But look at all this topping action, and actually there's a gap down here that hasn't been filled yet, which is let me redo that. This will probably be later after the fiscal year ends in April. Probably in May we might see this level attacked, but for now we have a gap that has not been addressed. Yeah, we have that gap that was not addressed over here, right? So we might see price come and fill that. And when it fills that, it would come back down to here, right? 115.69. That'd be huge, right? That would be like some type of currency devaluation or something where everyone's running for cover, right? If we get that gap filled. See, this gap was filled. That one was filled. This one has not. These three have not. This one was filled, but this one, right? So we might see a break and a fill. That'd be huge to get that, right? So bearish on this. Well, forget that. Okay, moving right along. Okay. Aussie dollar, one of my favorite currency. I love this currency pair. If it were a woman, I'd probably propose. Don't tell my wife though. There you go. Dollar yen. I mean Aussie dollar. Look at that. Still, I mean, you can say, well, Greg, it's like chop too, right? But you can see there's like these nice runs that it periodically gets into, right? It's just real gentle, right? And we got a nice little up move from the lows, right? Just some higher highs and higher lows there, right? This is our monthly, our weekly, a little bit of a pullback, rally up, right? Are we running into old resistance? So that's what we want to take a look at, right? What are the levels? We can either use classic resistance like we did. I did that in another broker, right? Or we can actually do Fibonacci too. We can take a Fib from the last low to the high and get similar levels. And you can see that we are touching on the old high here, maybe pulling back a little bit. But there's no, I mean, we're still making higher highs and higher lows, stair stepping, move sideways for a bit, and it breaks. And we're actually at an area where we've been coming down, and maybe we see a break higher, right? The break higher really wasn't that high, so you can see that, initially when the trend is new, we get these big breaks, but as things start slowing down, we start getting these smaller breaks. So will this turn into a retest of 71.50? And we're at 70.44, which is not a whole lot big gain here, right? The gap here is to 74. If we can break the high, if we can close above this high, 71.60, there's lots of airspace to 7,400, nearly a 285 pip run, right? That's the last high. We have somewhere in between. There's a high here at 72. Still, it's about 80 something pips away, right? So just breaking that high was something that we could look forward to, right? Aussie dollar, I am bullish Aussie dollar. Let's go down to a 4-hour chart, and we can see that if we use our scalping map using Fibonacci's for our scalping map, nice double bottom, right? And then a rally. We're at the 38. My red line is my 38% retracement. 38% retracement is good support toward a 71.56 area. Let's just drop down and let's see what's going on there. We got, kind of crawling along, right? We've got a little Friday vibe here where things are, after a big surge, is taking its time. Small body candles, 30-minute chart, 15-minute chart, 5-minute chart, and just blah, right? After the initial news, there's a 10 a.m. news cycle. Look at that wick. That's the news pushing price up right there, right? 8:30, I don't think it moved at all. And I wouldn't expect it to move, the Aussie to move during New York, because Australia is closed. All the banks are closed. So somebody's playing around there, right? And we can see that after that spike during the 10 o'clock news cycle, things just kind of tapered off, right? New Zealand dollar is the same way. Look at our higher time frame chart. We had a really major kind of like downtrend, but we're kind of flattening out in what we call a descending triangle. Lower highs, but the lows are the same, right? Usually this is a bearish pattern, but we have an uptrend within that pattern, and so we're challenging the upper trend line formed by connecting this swing high with these other swing highs. We're penetrating it. So I was wondering if we get a break and maybe a fake blast. There's no edge here. I mean, bulls versus bears, I would say it's a toss-up. It's a 50-50 toss-up. But let's lower down in time frame, weekly. We can see small body candles. Looks kind of bearish. Daily chart. Yeah, I mean, we've got topping action right there. If you go down daily, go on the 4-hour. And maybe a double bottom here. Maybe it tries to rally back up again. But we're topping at this resistance area. But we're still making higher highs and higher lows. We've got this, rising trend line. So it's still, moderately bullish. Right. Well, until we get a break of structure and some lower highs and lower lows, a stair step down, well, then, we got to look to the long side for Kiwi dollar, right? And like Kiwi and Aussie, they are closer to China than they are to the U.S. And so if China has a strong economy, they're the big trading partners. Aussie and Kiwi are like a proxy for China, right? And so they might go in the opposite direction of the euro dollar and the pound dollar, right? Pound dollar has internal problems with Andrew Mountbatten, the ex-prince, formerly known as the prince. And then you have the Europe with its own issues as well. Let's look at gold. That's I know you guys are waiting for gold. And let's see what's going on there. And remember that big, wonderful uptrend that I talked about in the Gold Rush Blueprint? I put that out back in 2023. I said we're going to hit 5,000, and we hit 5,602. Right, the Gold Rush Blueprint. And so now we're in a period of sideways consolidation in a broad channel. After big moves up and big moves down, prices will take a break and start moving sideways, catch its breath, and we're nearing the top part of this channel, right? That 50, 68, 5100 area. So we might, if we just bounce around some more, we have a low that has not been tested, and we might see resistance coming in where sellers will lick their wounds and say, hey, you know what? Let's play the range. Let's sell at the top, buy at the bottom, and rinse, wash, and repeat, right? The thing about it is if it breaks out and starts hitting the stops, you get short, place your stop above the high, well, that thing could reach up. Gold is very volatile, and so it can move very fast and stop you out. So if you are trying to play the short side in a range, at the top of the range, I would ordinarily be bearish. Now, there's some interesting tools if you get TradingView. And, if you're able to get TradingView, and where is this thing? Yeah, you can earn $15 if you use my TradingView link. You get $15, and you'll get $15 off, right? And you can get TradingView, and I'll show you why you might want to get it, because there is, if you scroll down below, there's these technical meters here, which is pretty cool, and you can get some additional analysis here, and we can see that on gold on the daily chart. Strong buy, oscillators are a sell, right? And and in 4 hours neutral, we've got strong buys there. So with all the different currency pairs, you can use this wonderful tool that is part of TradingView. So if you don't have it, I don't have it for. I had it. It was working, right? Anyway, go back. Okay. Silver, big one. Go back to chart. Okay, don't want that. Okay, this is our monthly chart of silver. Wow, look at this. Look at this spike, right? Monthly chart. This is silver on a monthly chart. You can see the spikes that we've had back in 1980, high inflation under Carter. Another big spike here, 2011. And then big spike here in 2026, right? And after big spikes, we have usually seen these major pullbacks, but these pullbacks were engineered by banks that were using special techniques and hedging operations and things in order to get that price down, this artificial pullback, right? Right now, without that artificial pullback, they tried to take silver and only went down to $77. And look, it's back up above 82, right? So this is the engineered, they raised margin requirements and caused the silver contract to people had to liquidate because the margins were raised. They had to bring more money to hold on to their positions. People didn't have the money, so they had to liquidate. That forced liquidation allowed some banks to exit their short positions, right? But a lot of them are still short at $30, right? They're still short at $30. And so we get this pullback against the trend that's basically basing out for a move higher, right? And JD Vance just announced that there's a floor on strategic minerals, including silver, right? Putting a bottom. So basically, we have a floor on silver right now that's backed by the United States government and a group of other countries. So with that, and now notice how physical silver is $82, but paper silver is $74. Well, there's this really big difference between the two, almost a $10 difference between the two. So we could see a retest, and I'm very bullish silver. I think we go up into like the 400s, 400, 500, just based on a return to the traditional 1 to 8 silver to gold ratio. But unfortunately, the SLV is not keeping up with the physical silver. Let's look at the indices like the S&P and NASDAQ. We'll go maybe NQ. NQ's and NASDAQ futures. And we can see that looking pretty droopy there on the weekly, monthly chart. Nice big uptrend, tremendous run, right? At the 25,000 level. Whoever thought we'd ever get that high? We were like 7,000 at the .com bubble. But we are topping out at the 26,304 area. And we could see some type of a pullback or correction, which would be healthy. Usually there's healthy corrections in a trend. A 30% retracement takes us to 22,862. And so that's so bulls versus bears. I'm bearish in Q. Let's go to the SPX 500. Go really quickly. Same kind of thing. Look at this tremendous move higher after this was the, hey, sell everything. Everything's going to a recession. Wrong. We're wrong. I guess Trump was right about that one. Well, yeah. If you listen to mainstream left-wing media, you would have lost money. When you sell, when you lose, you lose money when you sell. If you stayed with it, that if you weren't panicking, they're talking about the panicans. It's like if you're there we go. It went up. Anyway, Bitcoin's another one. They used to call it digital gold. I think they're more like digital mold because it's been falling off the bat here, right? Hitting a high about 125,602. Bulls versus bears. Hey, I'm still constructively bullish here. We have made higher highs and higher lows. We just need to hold some areas, key areas for this to not turn into a reversal of trend where we go back down to like 10,000, right? And that's we connect these two lines here and project them into the future, right? We connect two swing points and project them out. 2 points make a line. That's Geometry 101. We are approaching, the 618 and a trend line. Sacred math, right? And an old high of the previous 2021 high. We're in a buy zone right here, right, guys? Right. So we've got lots of congestion here, lots of buyers that kept in here, and so we might see central banks and other people getting back into Bitcoin here. I'm cautiously bullish Bitcoin. Why? Because they say you don't catch a falling knife, but there's another adage in Wall Street called, buy when there's blood in the streets, right? I tell you, when it was 120, you wish you could get it at 60. Now, nobody wants it. That's we might have a little bit more to go. There's old lows at 51,000. I think that 50,000 is like the line in the sand for it, right? We get down to 50,000, I'd be a buyer at 50,000. So basically, I'm short-term bearish, but I'm long-term, medium-term bullish. Okay. So, guys, I want to thank you so much for not see any questions in the chat box. I'm going to stop sharing there, right? We covered pretty much the whole market, threw a couple of extra ones in there. I hope you guys have a great weekend. Happy Friday to you. And remember to tune to Bulls versus Bears. And if you want to get more information about how to trade faster with greater clarity, come over to our school community and join me there. Big happy pipping. God bless. Love you guys. Cheers. Bye-bye.